In today's video, we will be looking at liquidity inducement, Forex liquidity inducement. And at the end of this video, you are going to understand why some of your trades leads to losses and what you should be doing instead to avoid such a loss. So without wasting time, liquidity inducement is simply market inducing you to place the buy or sell order. Okay, based on your retail knowledge, you will have seen different patterns. Now, one of the examples of liquidity that I'll be looking at here is trendline liquidity. You see, trendline liquidity is one of the Forex liquidity inducement, where traders trade based on a particular trend line that is being formed on the chart, and that, my friend, might lead to so much loss that you might not even understand why it's happening. So now let's take a look at the trend line. Normally in trend line, we are told to always buy at the touch of the trend line. Okay, for example, we have this trend line, for example, here. Now, number one, the problem with trend line is it is subjective. The way you draw your trend line is subjective. Okay, I can draw it one way and you can draw it the other way, but that is not what I'm trying to say here, because I do not trade based on trend line. There are other ways I would have entered this market, okay, in order to profit from it, aside from looking at the trend line. Now, normal retail logic says when price touches the trend line, maybe the first two, you are going to draw the first two points. Okay, so when price touches the trend line, you buy. Whenever price touches, you buy. Whenever it touches, you buy, up until it takes you out. Now, I'm not saying this strategy isn't good. It all depends on what you combine with whatever retail strategy you are using. But what I'm saying is that the moment you see a trend forming, put it in the back of your mind that this is what liquidity inducement, because the market wants you to trade, to place a trade, so that there will be liquidity available for the smart money to take and fill up their orders. Because if they just move into the market and place a very mighty order, it might result to a crash. So they have to induce you and I to take a trade, so that at the end they will now profit from the liquidity to fill up their orders. Okay, so if we go to this 15 minutes here, for example, we have this push down. On this 15 minutes chart, we have this push down. Okay, then the market engineered liquidity around these areas here. Okay, the market engineered liquidity around this area, inducing you and I to sell. As a smart money trader, you are going to be involved in this at the first touch, because this is your supply zone. Okay, so that when price came in there, what happened? You took the trade. But if you notice what happened, price came back, moved again, formed a kind of trend, and this is where the retail trader will start entering the market, because they've seen a trend line. They draw the first two lines like this, okay, and then they start trading at the touch of the third. Now, as a smart money trader, you will have gone out of this trade, okay, probably any of this point here, because you will have gotten a beautiful risk to reward. But on the return, yeah, you can still continue, because this supply zone created a break of structure here. Yeah, so it still makes sense to do what? It still makes sense to still look for a short opportunity when price comes back in here. But however, since this market did not break structure, okay, remember we are in a bearish market, and this move is expected to break this low, but because it did not break this low, I will not be involved, or smart money traders should not be involved in this trade here, this third touch. so-called third touch on the trend line. But what happened here? The retail traders will jump in here, because all of these, they won't be taking this trade if they're trading based on trend line. Okay, they will be entering at the third touch, so they would have entered here, probably the stop loss above. Then what happened? You can see price takes away this trend line. Okay, takes away this trend line. So the question is, as a smart money trader, what should you be doing instead in order to avoid being in this trap? Okay, because this is a trap. The moment you are in it, you can't go anywhere. It gave you some few wins here, but what happened? Market came, took it out. Now what you need to do, because you know this is a liquidity inducement, when you say trend line forms, one touch, two touch, the third touch to ring to you that okay, this is an inducement, so that you look above it. What can you see above it? If you can see a supply zone or a form of order block, that is where you should be taking your trade from. Okay, so in this case here, the market was just consolidating, going up and down, building liquidity. All of these are simply inducement. I will explain this other form of inducement, or this other form of inducement, in the next series, because I want to make this forex liquidity inducement a series. Okay, I will explain this in the next video. So now, what do you do here? What you need to do is simply you wait for price to come into this supply zone. Why is this supply zone a high probability to take your trade from? Because we have liquidity feeding into it. Okay, we have liquidity feeding into it, so therefore it makes sense for you to look for what is short in here. Okay, now even at the end of the week, we see our price returning back, still playing in here. Okay, now what am I saying here? The best way to trade supply and demand is simply on the first touch. Okay, on the first touch. So when price came in here, this was where you are supposed to enter the trade. Is it that you entered based on the risk entry level and get a 2R out of this trade, or you wait for confirmation to get even a bigger RR out of this trade? So what am I saying here is because of what? Trend line. You do not want to be trading trend line blindly. It should give you a clue. Whenever you see 1, 2, 3 touches on a trend line, then it should ring to you that this could be what? A liquidity inducement. Another example is here. This place, you can see all of these. All of these are inducement. The market gives the retail trader reason to come into the market. Okay, we have the first touch, second touch. Now we have multiple touches here. Okay, most retail trader will be in this trade once the market touches this level. Stop loss will be below this, below the trend line. That's where the stop loss is, and that's how it's being taught. Okay, stop loss will be below this. But if you notice what happened, the market went up and down. Okay, just before moving up to this point, look at this, it went down, cleared all of this liquidity, coming into a demand zone. Okay, this is a beautiful demand zone here. This was a good trade that we took. Now, why is this trade valid? It has a break of structure, you can see, and it has what? Liquidity feeding into that demand zone. So instead of you to be trading the trend line, you use that trend line as a yardstick for confirming a demand or a supply zone or an order block. So you wait for price to come clear this. The moment price clears this low, all of this liquidity that has been engineered. Okay, this is another form of what? Liquidity engineering, or engineered liquidity. Market came, took out that liquidity into the demand zone, and then there she goes into this supply zone. Yeah, so you can be trading from here to this point. This is where you take out your trade, because this is a strong supply zone that led to what? Multiple break of structure. So this was the origin. Until this is being taken out, then we have a strong demand zone in here, so that when price return back, you can start looking for what? A buy. So let's look at an example on a different currency pair, in this case Euro USD, and also at the higher time frame of 1 hour. And remember, the market is fractal. Whatever I'm showing you in here is applicable on any time frame. Okay, so now if you look at this, you can see that we have a form of trendline liquidity here. We have a form of trendline liquidity building up in here. As you can see, we have trendline liquidity here. Okay, now for those who trade trendline, they will be buying at the third touch. You can call this a third touch depending on how you draw the trend line, or you call this a third touch. So the moment price is here, they see a trend forming. That's why it's called a trend line. Okay, so they see. Now the reason why they call it a trend line is because you can see it's forming a trend upward. Okay, so when price return on the third touch, this is where they are buying. And stop loss, sometimes they put it below, just below the trend line here, or even at the end of the trend line here. It's been long, I don't trade this anymore. I used to trade the trend line when we started trading back then. I read baby pips from the beginning to the end. I understand every form of retail concept, trend line, support and resistance, Elliott wave, harmonic patterns, and all of those things. Okay, all those are simply engineered with liquidity. They show you all those so that when you see it playing out, you put in your money, but at the end of it all, you get wiped out. And you can see when they entered there, the market took out all those liquidity, okay, and then moved to the upside. Now, as a smart money trader, what you will be doing, or someone that trades supply and demand, this is where you look to what? To enter the market. You identify a supply or demand zone beneath that trend line, because you know eventually price should trade back down into this, and this is where you should take your trade. Is that you wait for a confirmation, or you simply take it based on risky entry and your stop loss here? You see, if you don't understand all of this, you will know that, okay, this is why my trade is losing, because of this trend line. Now, another thing I want to show to you is that whenever you see a trend line, do not trade the other blocks in there, okay, especially after the third touch. For example, this other block here, this other block in here. Now, this is not only for retail traders. There are some people that trade smart money concept, but yet they notice that their trades do not lead to what? To profit. It's because of this liquidity inducement. Now, pay attention. After the third touches, okay, after the second touch, the other block here in here may not hold, okay. It may not hold, so you need to be very careful in case you are trying to take this, probably because it created a break of structure and you want to trade this higher. You have to be very, very, very careful. Why? Because this other block is sitting at a pool of liquidity. All of these are liquidity which the market might take before moving higher. So all of this other block here will not hold. If it does, maybe eventually it might come back, but I am always careful when I see other blocks at liquidity point. All of this pool of liquidity, engineered liquidity, liquidity inducement. They are inducing both retail and smart money concept. We are all retail traders, but we trade smart money concept. You are being induced in here to buy. You are being induced in there to buy. So we all are being induced to take a trade, buy order here, and the what happened, market came down to this point of origin of demand zone before moving higher. If you go back to the previous pounds USD illustration here, you can see that all these other blocks here, okay, all these other blocks should not be traded. You don't need to be trading them. Another example is this one here, but this is another form of liquidity, which I will explain in the next video. Now, this order block here didn't hold. Price came, cleared the order block. Why? Because this order block is sitting at the pole of liquidity. Instead, it just went below to this one, though it didn't get there. This would have been where just a little touch on it, okay, before moving. So you have to be very careful on order blocks sitting at what? Trend line. So if you want to understand a comprehensive idea or understanding of liquidity, I will see you in this video.